Today, we're going to be taking a look at one of the most hyped projects in the entire crypto space, Cardano. Will it end up being everything it's cracked up to be, or will we be looking at another Tron or EOS, a project with a lot of hype that fails to live up to expectations, at least to this point? I don't think that's arguable. Today's a big day for ADA, and we'll determine what the future holds, along with looking at some of the most interesting stories in crypto coming from the United States economy. You're definitely going to want to stay tuned. Let's get it. Welcome to BitBoyCrypto, the hardest working channel in crypto. If you're new, hit that subscribe button and join both my Telegram groups to learn more about crypto or connect with me and the Bit Squad. All right, guys, we are going to be taking a look at Cardano's launch point and interesting news regarding the United States economy and the future of crypto. Definitely you're going to want to stay around for the whole video because some of the stuff we're talking about today will have giant reverberating effects on Bitcoin and probably your portfolios. We all know today is a big day for Cardano. If you have some in your portfolio, I would keep it close to the vest, bet big on it this upcoming bull run. Today, they are hard forking and migrating from Byron to the Shelley Hardfork. Don't worry, that's just a bunch of old smart people. According to the Cardano team, this is the moment when Shelley comes alive on the mainnet, introducing features such as stake pools, delegation, and rewards, opening up a new era of decentralization for Cardano. Now, Cardano's founder, Charles Hoskinson, has high hopes for where the price can be in a year from now, and as well as where the network can be. Of course, if you didn't know, old Hosk was in on the beginnings of Ethereum, but he wanted to take scalability to the next level with Cardano and its tech backer, IOHK, or Input Output Hong Kong. IOHK would build cryptocurrencies and blockchains for corporations, government entities, and academic institutions, focusing on the Japanese market first, aiming to build something that was the intersection of commerce, computation, and compliance. Cardano has, of course, evolved to become IOHK's key project. Cardano is described by its founder to be a third-generation smart contract platform and cryptocurrency, which, as Decrypt noted last year, Hoskinson claims is more rigorously researched, tested, secure, and scalable than the competition because, you know, science!
First, I'll need tenure. Done. And a big research grant. You got it. Also, access to a lab and 5 graduate students, at least 3 of them Chinese.
By third generation, Hoskinson views Bitcoin as first generation, with Ethereum taking its root principles and expanding on it. Everyone considers Bitcoin to be first generation blockchain, and Cardano by Hoskinson is considered third generation blockchain. Ethereum had its root principles from Bitcoin and expanded upon it, with smart contracts, for example, becoming second generation. Cardano takes the best of Bitcoin and Ethereum and expands on them to become third generation in the eyes of the founder. In the Decrypt article from last year, they would state that Cardano raised a respectable $62 million in its ICO in early 2017. It was marketed as an investment to retire on. It sold primarily to Japanese investors. In fact, 95% of the buyers were Japanese. It's expanded its base, of course, since then, to include developers and corporate partners all around the globe. Maybe you didn't even know that about the Japanese beginnings. Now, as of the time of this video's script being written, the market cap is $3.6 billion, 58 times its ICO price, and number 6 overall in market cap on CoinMarketCap. Last month in June, CoinDesk published an article titled First Mover. Cardano's no Ethereum killer yet, but it's winning in crypto markets and killing it has, especially over the last 2 months. The article would say that the recent catalyst for ADA's price rally appears to be Cardano's progress toward a key upgrade of its network known as Shelley, scheduled to go live over the next month. With Cardano up 2% at the time of this writing, it doesn't look like the market is selling the news as of yet. However, it definitely could happen. The next few days will reflect how investors react to the mainnet launch. Although it is worth reaffirming that the recent run-up by Cardano this year has been in anticipation for that. So much of the value already should be priced in, whether or not the market reacts positively to it. Now Hoskinson sees Cardano has cleared a path for building a cryptocurrency that's able to scale to 1 billion people. Clearly, he sees mass adoption coming to crypto if he thinks a blockchain needs to be able to scale to that size. And by the looks of it, he's right. The economy is looking to blockchain, and this could be huge news for Cardano. But let's check out what some people from the CFTC recently had to say about crypto and its role in the economy. Just yesterday, an article published by CoinDesk titled CFTC Chair, a large part of financial system could end up in blockchain format, said that the nation's top commodities regulator, the chairman of the CFTC, Heath Tarbert, is quoted to have said, "When you think about the idea that at some point a large part of our financial system could very well exist in blockchain format, that's also revolutionary." He said this after having compared the borderless, decentralized blockchain boom to a digital renaissance and proclaiming a fascination in DeFi. Now, according to CoinDesk, he said that perfection shouldn't be the enemy of good when it comes to regulating the cryptocurrency space. And those are the type of things that we love to hear. He went on to say, CFTC doesn't want to over or under-regulate the space. Bitcoin was labeled a commodity, of course, in 2015, and according to a CoinDesk article in January, and just recently, Ethereum was also confirmed as a commodity because it hadn't been treated as a security by the Security and Exchange Commission, or the SEC. Tarbert said it stands to reason that it is most likely a commodity. So definitely not 100% confirmation, but we all believe that Ethereum is safe. Now, the CoinDesk article from yesterday went on to quote the CFTC chair. He said, "My view is that to be a successful CFTC chairman, meaning regulating the derivatives market, you have to have a keen understanding of the underlying market. And so I've tried to learn as much as I can about the various agricultural sectors. I've gone out into the fields and gone to grain elevators. I've gone to a feedlot to learn about cattle and wheat. I'm learning about oil, but I'm also learning a lot about crypto. And in many ways, because it's so revolutionary and so cutting edge, I'm spending a lot of time learning how it all works in the ecosystem. It's a little more complicated than a cow, I think." But that's not the only crazy news coming from the US, as the dollar index is dropping like a rock, most likely in reaction to just printing money whenever we want. An article from Bloomberg published yesterday with the title, "Goldman Warns the Dollar's Grip on Global Markets Might Be Over." But the opening paragraph of that article reads, "Goldman Sachs Group Inc. put a spotlight on the suddenly growing concern over inflation in the U.S. by issuing a bold warning Tuesday that the dollar is in danger of losing its status as the world's reserve currency. Scary times." Regarding gold's recent all-time high, Goldman strategists, including Jeffrey Curry, would write, "Gold is the currency of last resort, particularly in an environment like the current one where governments are debasing their fiat currencies and pushing real interest rates to all-time lows." The Goldman Sachs team would add on that there are now real concerns about the longevity of the US dollar as a reserve currency. Now, this shouldn't surprise many people in the crypto sphere. Arguably, one of the main motivations, if not the main one, for Bitcoin adoption was distrust with undertones of hatred of the current fiat system that the dollar is based off of. For years now, even before Bitcoin was created, many were warning of the fragility of the system and the flaws it produces even when seemingly stable. A large part of the excitement around Bitcoin and subsequently other cryptos with limited maximum supplies was that no central bank or institution could suddenly decide to dilute your value by printing or creating more currency, as is done on a consistent basis with fiat, only more violently in times of crisis such as this pandemic. So this hyper-aggressive stimulatory path that's been taken by U.S. leadership is the main reason the dollar is declining relative to other major fiat currencies, as evidenced, of course, by various indices weighting the dollar against a basket of competing fiats. This doesn't make other fiat currencies feel much safer, though, as we've talked about many times on the channel. Nearly the entire world is undergoing stimulatory spending in efforts to offset the economic mayhem incited by the pandemic and unprecedented lockdown policies, which we may return to some extent with future waves, but it seems to be much worse in the United States, which might be why our dollar is dropping against other currencies. The Goldman team would say that today the risk is from debasement of fiat currencies that sows the risk for inflation, and gold is the best hedge against debasement. Now, debasement just means the devaluation of a currency, which is a known effect of inflation that outpaces a growth in demand. In short, the demand for the dollar is falling, as its value is, and many are seeking safe havens to hold their purchasing power instead of their wealth depreciating with the dollar. Gold is the main safe haven and has stood the test of time for centuries. Compared to silver and other commodities, gold's position in the physical commodities world is analogous to Bitcoin's position relative to other cryptos. It is the giant, trusted by virtually everyone. However, as many have been noting, both in alternative and mainstream finance now, Bitcoin is becoming increasingly looked at as a safe haven. Having the advantages over physical gold of being able to send across the world without physical transport, meaning faster, cheaper, and safer transactions, has real-world use case to compete with gold. One might say, oh, but you can send digital gold. Well, that might be true, but digital gold is contingent upon reserves being maintained. And unfortunately, a lot of digital gold ownership shows elements of the fiat model, where many more gold IOUs are sold than what is in the reserves. Meaning, if everyone started redeeming their digital gold for real gold, as they are supposed to be able to do, reserves would dry up well before everyone is able to redeem their gold. Kind of like if we all went to the bank and withdrew our money. This might not be seen as a threat, but in a time of unprecedented economic uncertainty of a massive scale, it's worth understanding. You don't own any real gold when you buy digital gold. You're just buying a representation of ownership. You do own your Bitcoin, however, and unlike gold, you don't have to rely on any digital commodity provider to maintain reserves and be able to follow through on redeeming your gold on demand if you were to decide to do that in the future. A Reddit post yesterday on the cryptocurrency subreddit was gloating, posting this image. I'll never understand why we celebrate the collapse of any asset or commodity, regardless of how it affects our own bags. But now it's your turn. What do you think about Cardano? Will it continue to rise, or is it due for a huge mainnet launch correction? I would say this is possibly the biggest and most hyped mainnet launch to date, so it will be interesting. Make sure to please drop your thoughts and comments down below. Now, I hope you enjoyed this video. If you did, please make sure to smash the like button and hit subscribe to become a member of the Bit Squad. Thank you so much for watching. Have a blessed day. BitBoy out.